Hi everyone, welcome back to the market update featuring by Market Sol and Rationale. Three big factors have been shaping market pricing recently, and we're breaking it all down for you. First of all, easing inflation. I mean, not coming like powerfully down, but it's stalling at least when you look at the details, with inflation data coming like at least close to as expected. We're seeing some. We saw some strong risk-on sentiment. Investors sold USD and shifting to the equity side. We saw risk-on sentiment came a little bit back in. Second factor is for sure President Trump's inauguration highlights. His speech touched on some key topics like inflation, energy production, and tariffs. Markets, but like a tariff side was at least soft. Markets relieved a bit with no immediate tariff announcements, also leading to a slight rise in S&P futures, despite the fact that the market was closed. And like we saw some initial weakness in US dollar. So we saw that Wall Street Journal news that suggested that it might, like the Trump administration might not be as hawkish as expected on tariffs, but it might be too early to do such comment. I still think that there some potential on it, maybe because there were some rumors that Scott Besant's team they're planning to do some gradual increase on tariffs, and that's why it's so early to assume such thing. That's too early to start party. Expect higher tariffs, still there's a potential of, I mean, the expectation is for China rising to around at 20 levels from 10% levels. Additional measures might include some protecting technological companies in US and limiting some limiting transshipment, tariffs on EU autos and pharmaceuticals. That, I mean, definitely their agenda will be the major focus in 2025. And the second factor that is shaping market pricings is earnings season kicked off. The financial sectors delivered strong Q4 results, fueling optimism in the market. Major players like BlackRock, JPMorgan, and Wells Fargo, they had they released a positive earnings season. So these factors are driving markets, and I want to explore in this video directly to charts the impact of all these three factors on some major charts quickly. First of all, for sure, I want to start with dollar index. That's how I'm watching dollar index. Okay, here this weekly chart. So we saw this it came from 110 levels to 108 levels with this a tariff. At least let's call this a dovish tariff or dovish tariff expectation of market. We saw that the dollar index came down, but I still monitoring this dollar index chart. This breakout happened. Technically, if I didn't know anything about the markets, just by looking to this chart, I would say that okay, the price is pulling back. And still the upward momentum is on. And while I'm recording this video, as you can see, daily chart, this is daily chart, we saw some rejection. This you can see this barely seen chart is 10-week moving average. But yeah, at least this area of 108 level is acting as support for now. And I mean, despite that, we hear a lot of stuff from markets. When I want to close my ears and I just want to focus on pricing solely, I will be focusing this chart. If this chart says that is going up, that means the major players still believe that tariffs gonna be hawkish. But that's the way I'm evaluating this Republicans' agenda. Second chart, just to see this reflection of the reflection that I show in dollar index in euro dollar. As you can see, same here in the weekly chart, it's just breakdown occurred and pulled back to this old support, new resistance level of 1.04 levels. And again, I have the same mentality. Just remember that if we see higher tariffs, that will mean a bad scenario for European companies and euro currency, because of the trade between Eurozone and US. quickly I'm skipping to another trade idea that might be used. Euro franc, here you can see head and shoulder bottom chart pattern is formed here, and when it's head and shoulder bottom, a potential breakout might be used as a long opportunity. But the thing is here, generally I really don't like to be long in any kind of instrument, whatever it is, just without looking to the ticker. I don't want to be long when it's just below 200-day moving average, this red line. So that's why I would rather to see some consolidation around here and wait this 200-day moving average to come a little bit down and to see a breakdown just above that 200-day moving average. But it's all your choice. You can be, you can risk, that all depends on your risk aversion. But a potential, there's a game plan, trading game plan like this seems sound to me, being long here. Generally, I want to see at least this, to see a daily close above this neckline, just in currencies around like a 1% or 1.5%. So let's say, for example, this is 0.95, let's say. I want to see 0.9445, just 1% above. I want to see just close above 0.9540. It's just like around here, 95 levels, let's say, and probably that will be above 200-day moving average. That will be in line with my general mentality, and the stop would be definitely much more tighter than now. But I want to see some further consolidation around here. If we see, so just remember that franc is highly correlated in general with gold, and euro is highly tied to Trump tariffs. So if you want to be long on this, the scenario should be like this: tariffs gonna be dovish, okay, and gold is going sideways, let's say, not maybe like a higher. If it goes really if you see really strong performance on gold, that will mean bad for this game plan. So quickly, pound franc, that's another trade idea against franc, and being short in pound and long in franc, that might be an option. So as you might remember from the previous video that I mentioned about this UK treasury yields crisis happened due to a stagflationary environment that might occur, fiscal problems plus inflation is high. But fortunately, the last week we received UK inflation number that came low. That was a market friendly data, and that's they need to see some further development on there for sure. But apart from that, if you want to be if you want to be short on this, the environment should be like this. This still UK problem should be ongoing. And if you see some further action on gold, and at least not that huge tariffs, also a dovish tariff scenario also would be better for this scenario. And being short on this, yeah, sometimes I receive such questions if I'm just trading, if it just breaks down or breakouts. So I personally sometimes I don't want to risk my risk per trade when I'm risking some portion of my portfolio. I don't prefer just to be in one level. So I rather to do some pyramiding in any kind of trades. So I would like to have some bullet in my pocket along the way, just to be safe, some cushion, just to be safe when the price breakouts or breakdowns. So breaks down. So here you can be also start to position yourself here, also one position with a stop around here. So maybe you can do let's say your risk per trade is 1%. You can do 0.3% risking here, then maybe one here, and then maybe one, it breaks down. So then you're gonna have some average with some stop around here. That might be just a way to just one way to create generate a trading plan. So yeah, here the important part is it's not about a price action, it's not about the direction of the instrument, it's all about your portfolio management mentality. The other chart is gold chart. Here I still don't see any reason to be short, to be bearish in gold. As I mean, maybe one reason could be, okay, Trump's mentality is like a peace around the world, geopolitical tension is down for now. That might be one thing, but in general, rates are coming down. Coming down rates means that real rates gonna come down. With low real yields, we see like higher gold prices. In general, in like after really like perfect performance in 2024, I really like a gold is something to be long for me for 2025, but not aggressively. That's my mentality for sure. Maybe like let's say 15%, maybe maximum 20% of your portfolio. That might be a that's like my mentality for now. Here I'm following this symmetrical triangle chart pattern breakout, but remember that here is also another resistance that market might respect to the level. And yeah, I'm monitoring this potential breakout here, but yeah, in general I'm following this symmetrical triangle chart pattern. And if we see some pullback, I'll be monitoring to see if the price can hold around this 21 and 50-day moving average, the short-term moving averages, in order to say that, okay, the long price activity is still there. The other chart is SP 500. So this is also both directional. Remember that in all my videos, I'm not suggesting any, okay, this S&P is going to go up or go down. I'm just trying to prepare myself for any kind of direction, because I don't have any power to suggest the direction. We can only comment on that, but we can prepare ourselves to any kind of direction with pre-managed game plans. So if we had seen a breakdown around here, then head and shoulder top chart pattern, that bearish chart pattern would be in action. But if we see any breakout around these level, let's say, yeah, around let me see what's the highest, yeah, 6060 levels. If we see a convincing breakout, then head and shoulder top failure chart pattern will be in action. And when we look at the price target of head and shoulder top failure chart pattern, that's 4.8% and 4.8% from here. Yeah, just manually I managed to find the right spot. It's around 6,380 levels is the target of head and shoulder top failure chart pattern. So it's both directional, and also that level is around median expectation of big institutions that they made in the beginning of 2025 for the end of 2025. And here, this chart is Russell 2000. That's, I think, important chart. So if you're a follower of rationale, or also if you're following these videos, not in action. So I had mentioned this rectangle chart pattern before in Russell 2000, and we reached the price target is reached in this chart. And now I'm following this in the weekly chart. This top with handle chart pattern. As you can see, it's consolidating around here. Again, you can just wait and enter to trade around here with a stop maybe just below a daily candle or weekly candle. But if you want just pyramiding your position, here might be your first entry, as we might see some consolidation around here. And I don't know if you remember that just before the election, there was some, like, as you might remember, in 2024, the major driver of US equities was Magnificent Seven. But just before the election, we had seen some sector rotation from big companies to more like a mid and small cap companies. And at that time, we saw this action. We saw this action that lead this rectangle chart pattern to reach its price target. And then after the election, time that action stalled with the yields going up, and we saw this like a depreciation in Russell 2000 index. And if we see some higher pricing in this Russell index, that would mean sector rotation to be resumed. And in that scenario, by the way, like we're gonna see some Q4 earnings of those mid and small cap companies in the upcoming days, and that might be the main driver of such scenario. That's how I'm following this Russell index, and with the narrative of sector rotation in the site. So here in the weekly chart of STOXX 600 European stocks, in the daily chart you can see that with this like a dovish tariff news, we saw this appreciation, and it got rejected from this level of, let's say, 530 levels. A potential breakout might be an opportunity of being long in this chart as well. And I think, like, if we just to in the narrative side, what's the story behind of this chart is, if we see some lower price, that will mean that market believes that tariff's gonna be hawkish, tariff's gonna be tough, and vice versa. That's the situation. That's how I'm following STOXX 600 index. And UK100, with the UK problem and like a gilt problem and stuff, it didn't impact that much UK companies, as the majority of UK companies is highly tied to USD rather than pound. Pound depreciated a lot, but UK companies did not. And you see that in this chart, a breakout occurred from this ascending triangle chart pattern. And maybe if you think that the price is trenched a lot, like you can just wait and try to be long in a potential pullback with a stop around here. That might be another trading plan, game plan. And Bitcoin chart, I had mentioned this, maybe I'm mentioning this for weeks, that I'm following this, and then like for sure in the weekly, this huge cup with handle breakout, and the price consolidating around here, and just got below this like a short-term moving averages, got up, it's consolidating. And here I'm following this head and shoulder chart pattern. If I mean, similarly to SP 500 chart, if I see a breakout, for example, what's the 102K, 102, 500, 1000, 2000, yeah, levels, let me see, sorry. Yeah, the level is 102, 500 levels. If I see a breakout, and if I need to see some convincing breakout just above 105K levels, it will be around here. But I want to see a daily close on this. Then the bullish scenario will be in action. And conversely, if we had seen some, for example, here, this when it came down, if we saw some like a breakdown below 90K levels, then the HNS top chart pattern, that bearish scenario will be in action. But currently I'm following here. That again, I don't have any guess on direction. I don't suggest such thing. I have game plan for both scenario. I have some entry points on that. That's my mentality in general. Ethereum USDT in the weekly chart, I'm waiting this head and shoulder continuation chart pattern to be formed. It's still question mark here. Let me put that question mark. Yes. And here, yeah. Again here, I'm waiting this kind of maybe price action before I come down. I'm trying to draw some bars here. But yeah, again, if you just want to wait to break out around here, that's one choice. But what I'm trying to do is pyramiding. Maybe I can do like if I see some consolidation around here, then a potential breakout of around here, I might have a long position, my first long position here, with a stop just below any kind of daily candle or weekly candle, I don't know. And then if I see a breakout, that might be a second position. You know, that I'm just trying to show you my mentality. So yeah, that's all I'm going to talk about this week. Thank you for watching. I wish you a really good week and have a great day. Bye.